My name is Peter Hughes and I'm the chairman of the Risk Accounting Standards Board, or RASB. In this video we are announcing a call for action in relation to a joint initiative on accounting reform that has been formed between RASB, the Association of Chartered Certified Accountants, or ACCA, the Professional Risk Managers International Association, or PRMIA, and the Durham University Business School. It's being directed primarily to CFOs and CROs, as well as accounting and risk subject matter experts. There's a lot more about the joint initiative on the RASB homepage. Our mission is to conclude, based on empirical evidence, whether a new accounting method called risk accounting provides a viable accounting-based foundation on which financial profitability can securely transition to corporate sustainability as the primary accounting measure of corporate financial performance. At the core of risk accounting is a novel, non-financial risk quantification method first pioneered in the banking sector. In a research collaboration between RASB and the Durham University Business School that was formed more than 5 years ago, it was upscaled into an integrated non-financial risk management and accounting framework that quantifies, aggregates, and reports all forms of non-financial risks and accounts for the probable future expected losses that also incorporates the positive offsetting impacts of environmental, social, and governance, or ESG attributes. There are links to detailed descriptions of risk accounting on the RASB homepage. Our definition of sustainability is an organization's capacity to provide investors with reliably predictable returns on their investment in financial, environmental, and social terms. Note the emphasis on reliably predictable. In other words, sustainability is an organization's financial profit or loss, which is the backward-looking or historic perspective, adjusted for the forward-looking or future perspective, represented by non-financial risk-related expected loss accounting provisions that incorporate the positive offsetting impacts of ESG attributes. A risk accounting model for application in the banking sector has been successfully codified and tested in academia. We now need to validate it through proofs of concept and other types of field testing. We also need to begin the work of adapting it for other industry sectors. This is exciting, groundbreaking work that could potentially result in far-reaching changes being made to how non-financial risks are managed and accounted for. However, we recognize that our mission can only be achieved by bringing together experts from both the accounting and risk domains, whether they be academics or practitioners. We also need the engagement of CFOs and CROs to sponsor this initiative and provide access to operating environments for proofs of concept and other field testing. You can register your interest by filling out the form on the RASB Call for Action webpage. By registering, you'll have privileged access to research papers, webinars, and other project outputs. You will also be able to contribute to the development and proving of risk accounting standards through participation in technical work groups, proofs of concept, and other forms of field testing. We would love to hear from you.